Welcome back to the channel, or welcome to the channel if it's your very first time here. My name is Troy, and today I'm going to be going over the 63rd update to the Anyone Can Invest portfolio. Now, if you don't know what the Anyone Can Invest portfolio is, simply put, I was looking through YouTube for many years and was trying to find somebody that started from zero so I could watch their progress through investing as a dividend investor. Well, plot twist, I couldn't find it, so I decided to make one on my own. What you'll see if you go all the way back to episode 1 is me starting a brand new dividend portfolio, picking individual stocks, starting with just $60 every other week, and it's built to where you'll see it today. But without further delay, let's go ahead and check where we were last episode. All right, looking at this screenshot, this is a screenshot of where the portfolio sat last episode if you didn't happen to see that. So you guys can see we had a cost basis total, that is the amount of money that we invested into each of these stocks, sitting at right around $315. I can't exactly get it to $315 because Fidelity does not allow me to for whatever reason, but it's as close as we can get. There was one stock, Dillard's, that was at $313. So that one I could add money to, and I did this episode, so we'll get to that here in a second. Down at the very bottom, you can see that the account total last episode was sitting at $4,169.71, and the account was in the green by $376.40, or up almost 10% at 9.97%. So now let's fast forward to where we sit today with the current episode. Again, we added that $5 into each and every stock, with the $60 added on May 29th. And here you can see the imbalance chart. We have a goal amount of $320 per stock, and you can see the current amount in the next column. We are within balance. The amount to goal, the last column on this sheet, as long as there's no red in there, that means that I literally can't add that amount of money because Fidelity doesn't let you invest anything under $1. So we are what I like to call in perfect balance. I can't get it any closer than it currently is, so we like to see that. This next chart I call my episode over episode momentum chart. I really like this chart. It's kind of crazy to see, like, I do an episode every 2 weeks. It's always crazy to me, like, how much one stock can change over a 2-week period. It's just 2 weeks, and that's for the better and the worse, right? So you go back here, we have episode 62 in the second column, which was last episode, episode 63 in this column, which is this episode, and then the last column says the percentage change just since that last episode. Not all time, just in the last 2 weeks. So some outliers on here. Good news is we only have 3 stocks that are in the negative or that have went down over the last 2 weeks, so we like to see that. We have STLD at the very bottom, up 20.89% in 2 weeks, which is nuts. ODFL, 2 stocks above that, up 12% in the last 2 weeks. That's nuts. Dillard's up 10.69% over the last 2 weeks, which is nuts. Also 10.69%, pretty nice. And then the negative stocks, the 0.09, we're not worried about that. The negative 1.10 from KNSL, that's whatever. But Intuit down almost 10%, 9.5%. Just in 2 weeks. That's pretty rough. So again, good and the bad. I like to look at this chart. The momentum is pretty cool for me to see. So this next thing that you're going to see is I can never get this to play on time, is the lifetime momentum. So this is each and every individual stock and how it's done episode over episode, the ebbs and flows, the ups and downs of each stock. For the longest time, AVGO or Broadcom has done very, very well. They've been the top stock in the portfolio as it currently remains right now too. We'll see that here in a second. But yeah, I just like to put the long term, the life of this portfolio, if you will, into motion. It's cool to see stocks go up and down. So it's better than looking at a stagnant line chart. So there's that chart. And then the next one here is the best and worst performers. This is all time. This is where these stocks currently sit, and this is the screenshot that you guys will see in 2 weeks as the previous episode. So currently largest or best performer, I should say, is still AVGO, Broadcom. We have 1.5 shares of that. It is up $369.80 or 115.88%. The worst performer is Intuit. It just had a terrible week, or a terrible last 2 weeks, so that would make sense. Intuit, we have half a share, a little bit over half a share of Intuit. It's down $141.75 or 44.38%, so that's rough. The good news is I still believe in Intuit and all of its its catalog of like things that the company owns. A lot of things that we use in finance still goes through into it, which we like to see. So I do still believe in this company long term. So we're going to keep buying it while it goes down. And when it comes back, hopefully it comes back, we'll be sitting pretty. You guys can see at the very end of the Intuit line, you guys can see the 52-week range, $300.50 is the low, which is around where it's sitting right now. And then $813.70 somewhere in the last 52 weeks. So if we get anywhere close to that, we're going to be sitting pretty in this stock. So down at the very bottom, you guys can see the account total sits at $4,423.37. We're getting really close to $4,500. Again, I do this portfolio with $60 bi-weekly. That's all I've ever added to it. $60 every other week for 2 years, and we're up to almost $4,500, which is super cool. So far right of the bottom, we're up $569.04, or 14.84%. So we're almost up 15% in this portfolio all time. That's with dollar cost averaging $60 every other week, $5 into every stock, no picking and choosing, just keep doing the same thing over and over and over again. So next up, we have another video. Hopefully I can get this one to play on time. Okay, so on my end, this is what we just talked about with the portfolio being up almost 15%. This is that same exact thing, but in a line chart that moves. Again, the stagnant line charts are cool, but like I think this does a really good job of like just showing you the ebbs and the flows. I keep using, I don't use ebbs and flows outside of this, but I use it a lot in these videos. But yeah, ebbs and flows of the portfolio, ups and downs. You'll see like we have, the middle range, then it has a really big drop, and that your heart drops with that. Then it goes back up and you think you're the ruler of the world again, then another sharp drop, and then another sharp comeback, and that's where we are now. So very, very emotional for any new investors that might be watching this series. It goes up and it goes down. Just do not get off the ride. As long as you're consistent and you believed in the strategy that you picked in the beginning, just let it ride. That's the hardest part about picking individual stocks is, they go up and down, and like, you don't know if that stock that you picked might have already had its heyday and it's, on the way out, like a Lehman Brothers or something like that. Or, if it's just a little buying opportunity, it's the dip there. You never know, which is another reason, new investors, if you get started with ETFs, yeah, you might miss the NVIDIAs and Broadcoms and stuff like that. Technically, you're not missing it because those stocks are in those ETFs, but you'll miss out on like the hyper gains, but you'll also miss out on the hyper losers too. So you kind of get a big basket that's a more smooth transition to wealth versus the really, not even potentially, it's almost guaranteed to be rocky transition to wealth when you do it the other way. So I talked way too long on this one. That might be a problem in editing. But anyway, next I want to get to the passive income received since last episode. So I'm still a dividend investor. I still enjoy receiving those dividends, that passive income that I just invest in a company and they pay me money while I sleep. That's still nice. That's still a part of this portfolio, and we're still growing those. So we've gotten technically 2, it looks like 3 in this screenshot, technically 2 dividend payments, technically 1 interest payment, 1 dividend payment, but I digress. So on May 29th, we received our interest payment from SPAXX, which is just interest on the cash sitting in the account, waiting for the bonus investment. We'll get to that in a second. On this chart, you guys can see at the very, very bottom, we got that 9 cents from SPAXX. At the very top of that chart, you'll be able to see SPAXX has now paid $2.89, or 3.89% of the total money received in this portfolio. Then on June 1st, which technically at the time of recording hasn't happened yet, but the dividends are already in the account, we received 93 cents from Carlisle Companies. You guys will look at this chart all the way down there at the bottom. It has increased since the last payout, and it's increased since the payout before that, and then payout before that, and so on and so forth. So there's that 93 cents up at the top. CSL has now paid $4.52 in total, or 6.08% of the total dividends paid in this portfolio. So let's go ahead and round these numbers up. We'll be able to check to see where we finished May and what foot we're off to, right foot, left foot. I don't know which foot's the good foot, but how we're off to in June, if that's even a sentence. So here's this chart. You guys will be able to see right there, like I just said. So May concluded at $3.49. Again, we're not lighting the world on fire with any of these dividends, right? I can hear the people, watching the video or laughing and on my Facebook or whatever. This money's not going to, pay for a gallon of gas these days. But like you guys can see, we're up 73.6% from May of last year. That May was up 402% from the May of the prior year. So it's all about just keep adding the money. This is something sustainable that literally anybody can do if you have $60 that you can spare biweekly. So yeah, anyway, we're up that 73.6% from last May. We're already off to a good start in June. We had that one dividend from CSL for 93 cents. We're 42.9% of the way there, away from tying what we made in last June. Obviously, the month literally right now technically hasn't even started yet. So the month literally is about to start. So I'm really excited to see where that June number ends up and where we finish quarter two at and all the things. So all that being said, you'll add up quarter one, add up the quarter two that'll finish, in a month. Down here at the bottom, the total sits at $34.62. Again, doesn't sound like a lot, but when you look at 2025, we were at $32.47. We've already passed it. We just started June. We have basically another second half of the year to just add, to build the bar, to raise the bar so high for 2026, for 2027 to try to come and beat it again. So we like that. So we're down to $34.62 for the month, or for the year so far. $2.89 per month, or 9 cents per day. We're already 6.6% higher than we were at all of last year. So like to see that. So next up, I talked about the bonus investment earlier. Here's a quick update to the bonus investment currently. Current patty of $41.82 per year, which breaks down to $1.61 per biweekly, so twice a month. Current cash in the account sits at $19.76, waiting for that next bonus investment. First bonus investment was completed on January 9th, 2026. The new projected bonus investment date, I think, is actually the same as last episode at May 17th of 2027, which is 493 days from the first bonus investment. Again, for anybody new, that's obviously a lot of time, but the first bonus investment took us 724 days. This one is projected at 493 days and will get faster. Here's the last 10 episodes projected bonus investment date chart. That there has to be an easier way to call that. But you guys can see the trend line going down. In this case, a trend line going down is good. That means we're getting sooner and sooner, quicker and quicker approaching that date. You guys can see it back in episode 53 where it was and where we sit at episode 63. And we are remaining below the trend line, which we do like to see. You will have ebbs and flows. Again, that's basically how I even out the stocks. Sometimes I have to add $6 into a stock that week, and that takes away from the cash balance and so on and so forth. So now let's see what's coming. So like I said, we just started June. Let me go ahead and open it up on my phone as well so I can actually give you guys the details versus just this screenshot. So let me go here. I should have had this ready already. My bad. Okay, so calendar. We are sitting at June right now. You guys can see that CSL dividend on June 1st. We already went over that. We have a KNSL dividend on June 11th. We have the ODFL dividend on June 17th. And then we have the AVGO Broadcom dividend on June 30th. So those are all things we like to see. We're going to have at least probably, 2 episodes between now and the AVGO dividend, because we're going to have 3 episodes in June. So then for ex-dividend dates, on the 3rd, that one is with ODFL. On the 16th, that is with PHM. On the 20th, which is weird because that's a Saturday. But for now, on the 20th, that's Broadcom's. And then on the 26th is Humana. And on the 30th is STLD and Dillard's. And then it looks, I don't know if you guys care for earnings that much. AVGO earnings on June 4th. So that's probably when they'll update their ex-dividend date to, I assume, the 19th, maybe the 22nd of June, if that matters. But yeah, anyway, I really appreciate you guys. Anybody that's new that started watching this series, I really appreciate you guys coming in. Anybody that stayed to watch this series, I really appreciate it. Again, if you guys have any suggestions, comments, concerns, anything you want to tell me in the comments, let me know down below. I'm going to make sure the editing's a little bit better on this one. I apologize for rambling ahead of time, and I will continue to probably ramble, so bear with me. I'm doing these no script. But anyway, until next time, see ya.